Vincenzo'S Go Crypto Investing on this 23rd of July, if you can believe this already, approaching August and the fall time college football season with clanging and banging. This is Vincenzo'S Go Crypto Investing. Remember to subscribe down below, comment in the comment section, bell notification, and like the channel to most importantly push us through the YouTube algorithm as we try to keep you on top of the breaking news and the daily chart and the gold and silver bullion market as well as the cryptocurrency market. And I haven't been making a video in the last couple of days because we had a very active severe weather day in the greater Michigan metropolitan area, right? In the great state of Michigan. Uh, and we had to cover that for our subscribers. That was from the winter time, but you can see just to show you what we were talking about here. We got a couple of good write-ups on midsummer temperatures and whatnot. You guys probably don't care, but you can see some of the hail reports that we had go through my local metropolitan area on Thursday afternoon. So we had to have a lot of coverage on that because there was a lot of damage and there was a lot of severe weather. So we had to cover that. You can see my avatar in the background out ahead of the storms with the lifting warm front. So that's one of the reasons that Thursday and Friday there weren't really any videos on here because I was extensively covering the severe weather that was going across the area. But you can see what we're looking at now in the daily chart. If we take a look at that, we had our $3.28 high back there in 2017. Where's my little price notes at? Those ones are good for that, the price label. And then in our last bull run, we had about a $1.99 high. I believe that was in 2021. If you can believe this, it's already been 2 years, over 2 years since the April or May high, whenever that exact date was. I don't know the exact date, so if somebody's in there and I said April and it was May, well, you're going to just have to forgive me. And I say that with peace and love to my lovely, glowing, beautiful audience as we try to continue to slowly but steadily build this channel with a non-hype, non-fleecing like BitBoy Crypto and Carl from the Moon and all those other shysters. We try to do this the right way, giving you the education and news that you need. And what we looked at after the news, we had this uptrend form after we hit that bottom in the end of October, the end of 2022, and in 23, we've had a steady, slow and steady, healthy correction to the upside after this brutal bear market. But like I told you in the last video with the Bitcoin price, if we take a quick peek at the Bitcoin price, we'll get into this chart here in a minute. But we were talking about how we haven't had capitulation yet. And you say, Vincenzo, we're down 60, 70, 80% in some coins. And I think we're still down about 55%, but we've been down as much as almost 70% in Bitcoin. But capitulation, this isn't capitulation right there. Even though that was a big dump over a series of months from about December 17 all the way to about October of 18, it was a steady, orderly decline. This was capitulation. And you say, well, that doesn't look too bad. Well, this was in a matter of a very short period. You had a 51% dump in the matter of about a month. That's capitulation. And the same thing with the COVID dump right here. That's capitulation too. Because if you take a look at that with the measuring tool, even though they don't look like a big dump because it's coming from a lower price, that was also a 61.23% dump in about a matter of a week. That's what you call capitulation, where everybody gets scared out of the market to the downside. And you can see this time we haven't had capitulation. We've had a steady mountain double top that we went over, and then since then we just had a nice orderly dump. But that's not capitulation, that's just the bear market, right? Where we have an orderly downtrend that from about the peak to about the trough, we had about a 77% dump. But that's not capitulation because it took from about November of 21 and didn't come to its bottom until about November of 22. So that took a whole year to go down 71%. That is an orderly bear market. That's not capitulation. And do we necessarily have to have capitulation? No. But do I think we're going to some point in time? I think we will. And usually it happens just before the halvening, right? And the next halvening, that is a moving target depending on the mining and all that stuff. appears to be sometime in mid-2024. And usually leading up to that, about 6 months before the happening, usually there's some sort of capitulation as we lead up into it. It drives all the weak hands out. It drives all the people that just couldn't handle the weight, because as we know, the crypto market likes to go through long, boring periods. Then a capitulation where it drives all these weak hands out, and then the new money and the smart money comes in on the capitulation and they ride the next bull market, right? Do we necessarily have to have it? No. Do I think we're going to have it? Yes. Does that mean it's going to happen? Absolutely not. It's just my own personal opinion. Do I think all coins are going to capitulate? No. There are things that happen in the market that can shield certain coins from capitulation when it happens, depending on the state of the market and the state of the coin and the state of what's going on in an individual thing. Does that mean you guys got to change your game plan? No. Whatever your game plan is, keep hodling, keep accumulating, and keep your same fortitude and your long-term vision. If you want to get rich or want to make a lot of money in stocks or crypto, it doesn't happen overnight. You have to accumulate. You have to have a game plan and you have to stick to it and not deviate from it, right? Because even when you have big 100% pumps in random coins, the odds that you bought it at the bottom and rolled it to the exact top is basically none, right? It doesn't happen. In hindsight, it looks easy, but when the market's actually moving, you have to parcel yourself in, just like Bitcoin. When it dumped, if you bought a little bit on a 50% dump from its all-time high, you're good. Then you let it do its thing. Then it comes back down another 50% from there. You buy a little bit more. Then it does its thing and it dumps. You buy a little bit more. And if you bought a little bit here, a little bit here, and a little bit more, you probably have an average price somewhere around $23,000 to $28,000, not 68,000. And then you ride the pump, right? But this has been a nice bear market rally. Is the bear market over? Based on the volume and all the coins and all that stuff, I would say no. But what we're looking at in the Bitcoin price is we're sitting here, but we got to get back to XRP. I just wanted to show you that. But there hasn't been capitulation in the overall market. But the XRP price was in this very, very long symmetrical triangle that traded into a rising channel, and I accidentally deleted. You guys will remember the symmetrical triangle that we had where you had your uptrend here, and it looked something like this. Remember that? That was your symmetrical triangle. This was your overhead resistance and the underneath support. Oh, come on. I hate when it does that. It always has problems. But that was your symmetrical triangle. And we'll put that in green. And we'll make that a little bit bigger so you can see it. Green doesn't really work well. We're going to change that to, we'll go with purple. But that was your symmetrical triangle here, where you had descending overhead resistance, uptrending underneath support, and it was there for about 12.5 to 13 months. And it started, the first time you hit down here was about July of 2022, and then you broke out about March 2023. So it was a solid 12 months. And then we got the healthy bull run right here that we were calling for. Then it started trading sideways on this blue trading zone. It kept getting rejected between 57, 58 cents and that 69 cents. And then, of course, the great news came out right here that had the big candle spike. But like we've been talking about, the volume and the weekly time frame, the monthly time frame has not uptrended, right? We were wondering if there'd be a new plateau here as the volume and the mean is still sort of trying to level off now after the big spike. And then we had the big candle wick. But now the volume's starting, if we zoom back out or back into a closer time frame, the daily time frame, you can see that where the mean of the volume was for a very long time, 12, 15 months. Then we had the big spike up in the daily time frame, really a 3-hour time frame, all that volume rushed in. And now the volume's been declining after we had a big wick sell-off, and then we went up and sideways. And you do know an old trading rule, when you go up and sideways after a pump with falling volume, that's often a sign that the price is going to want to come down. And now we can see we've had our first two daily red candles after this huge pump, right? Since the huge pump started with the news from the judge. And we've got our two red candles down there for the first time in the volume. So there's some sell pressure coming in. And what I would be watching out for, and what I've been telling you, if we zoom in even closer, into what I like to do in the shorter time frame. After we came off this big candle wick, we were telling you don't FOMO into a pump because it's going to lead you to slaughter, and then you're going to get stuck trying to trade out, trying to trade back in your game plan, and you're going to raise your average price if you bought in at 20, 30, and even 40 cents. If you start FOMOing in up there, you're going to wreck your average price, and that's going to have dire consequences on the way down on any type of correction. And you can see the volume came way down, and what we were talking about, that huge volume spike, how it essentially happened in a 4-hour time frame on that one big kick up with the candlestick, and then we're wondering if we could have a new plateau in volume. But right now it's starting to dwindle back down, and we immediately came back down to the top part of this blue trading zone like we told you we would at the 69-cent level, and it did hold initial support there. And if we put another price note, I think I deleted it on accident, which is down here at the 58 cents, and we don't like that. The background color needs to be white at the 58 cents, and then this needs to be black, and then we need to do this. We don't need to do anything at the 58 cents, right? And you can see the 69 cents at the top part of this blue trading zone did hold it as support after a quick initial from the wick, and that's why I tell you don't try to buy in on the FOMO, because it went down 28%, but then it went back up about 28% in this rising channel that we've been watching, and now we've sort of traded out of it. And now what I would watch out for is a retest of the 69 cents, and right now we're at the 50-day moving average in red in the 4-hour time frame, and what I would watch out for is on the retest, can you hold this and then try to breach this old high, but you got to have some nice volume come back in, and that would help support the price, right? Or you're going to start to trade into this blue trading zone, and then you're going to try to fight and claw your way and stick in it, and maybe even eventually come down and retest at 58 cents or the bottom part of that blue trading zone, right? So that's what I'd be paying attention for over the next day or two or few weeks, unless some kind of major news comes out somewhere, is to have maybe a step down fashion, as I like to call it, into the moving averages, maybe tag this 58 cents, which would be a healthy correction and would be expected after one of the top 3 daily pumps in XRP's history. And then you would look to hold that, and that might be a spot where it'd be a good spot to maybe accumulate a little more if it came down there, and then see if it can't fight its way back up to the 69 cents, because that would be something major that I'd be looking for. But as we do know, if you don't break that, or if you can't hold that, we're going to try to trade back down into this range. If we take my horizontal ray out here that I accidentally deleted, I remember the critical 37 or so cents right there. That was major support and resistance during this whole symmetrical triangle right there. Remember when we talked about that seemingly forever? That would be an area that if you can't hold on a retest on this top part of this, or the bottom part of this blue trading zone, if you come down to 69 cents and can't hold, trade back into here, and then you fall through, a logical spot for a major buyers to be would be that 37 cents, because that is an area where there's been major buyers stemming from about May of 2022 all the way until you had your last kickoff of it in March of 2023. So that's about a year's worth of time. And then the danger zone, something we have not flipped and went below since the COVID dump of 2022, was get below the mean of the volume. And that's down here at about 31 to 32 cents. And as long as you can stay above that, you're bullish. But these are all things that we don't want to do that. These are all things that you have to pay attention to. I'm not sure why that's doing. Oh, we need to do this for this one. Come on. That's all things you have to pay attention to. See that? Now we can actually see through it. You have to pay attention to on any kind of corrections to the downside. This is a major area. Not saying it's coming down here, because I don't know if it is or not, but I'm saying if you have a huge dump somehow, and somehow in the future it ends up back down here before it goes way up, you want to hold. This is your last line of defense on a correction. You don't want to slip below that 31 cents, because then that would be flipping an old major VP volume indicator, mean of the trading volume, from being bullish in the coin to being bearish in the coin, right? But that's for another discussion, another day, and a different time if that ever happens. But what I would be more worried about, if we look at the 3 hour time frame, we were in this miniature rising channel right here, and now we've broken that. And what I'm trying to tell you in XRP, I think 69 cents is an area of retest, and then 58 cents would be another major area in this blue trading zone, because it looks like we want to trade back into this blue trading zone. Something like this, where you had your big pump, then you have the rise in volume with falling price, which is bearish. It often tells you the price is going to come down. And I could see something like that and some trading taking place into this blue trading zone as the momentum and the volume and the steam and the momentum locally that happened with the judge's ruling, the people that were waiting to buy have bought. And one of the things that I've been hearing is the trading has taken over Bitcoin for more trading. Well, that's all good and dandy, but you don't really want trading to outtake Bitcoin. You want inflows to outtake Bitcoin, because trading just means people are buying and selling because they're trading. You want buyers to come in and long-term holders. You want massive momentum and volume, but you don't want them trading it, because if they're trading it, that means they're buying it and then they're selling it and then they're buying it. That just means there's a lot of buying and selling taking place. You want lots of buying and holding to take place, which those have one up. Addresses, I'm assuming, I don't have the data with me. I'll look it up. I'm assuming there's been a lot more holders in wallets with coins in their holding than there were prior. But other than that, the stability of the coin, the momentum, and the news has been positive, but it is to be expected after a major pump to have some kind of correction, right? Same thing with XLM. It's been holding up a little bit stronger for some reason, but it's following the same basic path. It's going down slower, but it's running over into the same overall thing, where you had the big candle spike in volume in essentially a 4 hour time frame, and now the volume's coming back down. And then you had that up and sideways consolidation. You had that initial wick, then you came back down to that 13 cents, that orange support line. You traded off it, had that U-shaped bottom, and then you rallied back up to where you would expect it to, up here to some old major resistance locally and some old long-term resistance at 16 cents. It came up against that dotted line. Remember that dotted line? If we look into the way left machine, you'll see what that old blue dotted line was. It was a long time ago. Remember back here? All the way back in 2022 at about January of 22. You can see where we were bouncing off. We had one bounce, two bounce, three bounces, and we had much more. Then we had four, and then we finally broke down, and that turned the price very bearish. And then we came back, that we highlighted for several times again at the 9-10 cents, where we held that same level for a long time. And then we actually continued it into here, where we kept fighting between about the 10 cents and about that 13-cent level, and then we finally dumped below it, right? And then we traded sideways to down, consolidated, traded sideways, and then broke up, right? And then we had our first run up right here. We had our first run up in here, and then we had a harsh sell off, and then we had the news come out, and XLM was the major beneficiary of the news on the same day. Those were the two coins that rocketed. But what I'd be looking for now is, as the volume's going down, some of that hype and momentum is dying down, which is normal and to be expected. You're getting rejected on that 16 cents again for essentially the second time. And I would expect another retest of that 13 cents, and that would be a major area along with the 200-day and the 3 and 4 hour time frame sneaking up. By the time the price, if it does come down there, that's an area you would like to hold, because if it don't, you're more likely to come back down towards that 10 cents. Not saying it's going to happen. Could it? Yes. Will it? Don't know. Is it probable? Musha musha. But I think right now we're stuck in the trading range as the trading and the consolidation is taking place, and maybe is setting up a new plateau between 16 and 13 cents, which could be a new accumulation zone, right? But that's to be watched and that's to be looked at. And that's another reason we said don't FOMO in here if you've been buying down there and accumulating. Let the pump happen. If you're not looking to swing trade it and you're looking at the future, like I like to look at, or I like to hold things long term, you let the trading play out, let the noise shuffle around, and let the price settle. And wherever it settles, and then that's another good time to maybe start buying. But right now, I think your new range is 16.5 cents is major upper resistance. 13.25 cents is pretty solid mid-ground support. And then, of course, major support is down here, which used to be major resistance at about 10 cents if it did come back down that far. But that's something we're looking at. Pay attention to the moving averages, because what I would say in the short term, maybe this weekend, is your next move down would come down to the 50-day moving average in red, and maybe even the 100-day moving average that lines up beautifully with that 13.25 cents. That'd be something that I'd be watching out for on any kind of major momentum to come in or major pump. You have major upper resistance up here between 23, 24, and about 30 cents ish, 28, between about 23 to 30 cents. That green trading zone is major upper resistance if you could get up there. Will it in the short term? Not sure, but it's something that we're going to watch out for. And then it's the same thing with the Bitcoin price. It's had this nice consolidation, but it's having that Bart Simpson sort of look where you been consolidating, and I don't move these boxes, and notice it's the bottom part of this red trading zone, as we know that likes to act as major resistance. Right now, it hasn't been able to break above that. If it breaks above that, your target would be up here at about 36,000, retesting what used to be major short-term support in this bear market rally in this rising channel. If we zoom out here, go to the 4-hour time frame, right? The 4-hour time frame, you can see that where it was major support. Then it broke through it. See that? It traded out through it. Then it came up to it, hit it as resistance, and now it's trading along the red area, the VP volume indicator, which it got rejected, and it's getting rejected again, which is to be expected when you're coming from below it. The mean of the volume likes to act as resistance, right? Conversely, when you're coming from above it, like XRP was, it likes to act as support. But what I'd be watching out for is if you can break up, this would be your major upper resistance between here and 39,211. But if you break down in sort of a Bart Simpson, you would have to start looking back down towards that $19,110. That's just the current quick look at some of the prices. Bell notification, like the channel. Peace and love to my lovely, beautiful glowing audience. We're going to get into some halvening updates later on, talking about what the halvening is, when the next halvening is going to be, and how that could affect the market and the cryptocurrency sphere. Peace and love.